Welcome to Investors Org. My name is Ahmed Al-Houli, and today I have a very special guest with me, Mr. Adrian Stone. Adrian, how are you?
Good, thanks Ahmed, thank you. Thanks for coming in.
No worries, anytime. It is my pleasure. So, Mr. Stone, tell us the story, how you got here, what you're currently doing, how things are going.
Yeah, okay, so firstly, Investors Org, I co-founded that with Brian Goldberg, who obviously introduced us.
Yep.
And we sort of we created the network about 2 years ago, maybe 3 years ago now. Time flies. And we created it as a way to connect high net worth people, family offices, with what's going on in Silicon Valley. Okay. So we brought a lot of venture capitalists out from the USA, like John Teo, who invested in Snapchat and Instagram and Twitter when they IPO. We brought Dave McClure from 500 Startups.
Oh, wow.
And that sort of was an extension of the work I've been doing with early stage startups. So for example, in this office today, this is the Dream Factory in Footscray, which is Lonely Planet's old headquarters. Yeah. And Danny Umlegor from the Impact Investment Group bought the building, turned it into a green building, and gave most of the space over to Inspire 9, which is the premier co-working space for the tech industry.
Awesome.
In Melbourne, and this is where I've been spending my time meeting with early stage tech startups. It's kind of my passion.
Awesome, awesome. So, you're obviously involved in the space heavily?
Yeah. Too heavily sometimes. That's why I'm taking an 8-week holiday.
Awesome. Lucky you. It's sometimes good to rest and recharge and so on. So, we hear a lot of successes, but we also don't hear of a lot of failures when really the space is really filled with many failures. What are some of the trends, patterns that you're currently seeing in the space from the perspective of an individual who's been through many successful startups and has seen many failures in the space?
Yeah, and it's really interesting because people try and future pick in this industry and try and pick trends. I mean, the hot things now are things like AR and VR, yeah. Augmented reality and virtual reality. I've got strong views around that. For example, virtual reality was easy to see that it would fail in the current marketplace because the technology is just not there yet. Yeah. And that's just about pixel density, how many pixels you can cram in front of your eyeballs. Whereas augmented reality, where it overlays the digital world with the real world, you can see that's a technology that's ready, ripe, and we're going to see some huge changes in that in the marketplace. Other trends are around voice. I think the time is right now where we will start talking to our computers much more than we'll be typing.
AI.
Yeah, and with AI behind, I think more voice interface. For example, yeah. Just reached my pocket, I bought a pair of these Apple devices, which yeah. are the new Bluetooth earpods. And what people say is that that just looks like a Bluetooth earphone without the wire on it. But what they don't realise is that this is a platform for communicating with your iPhone via voice, and that you won't pull your phone out of your pocket anymore and wait to see what Apple brings out in September. And I think that strategy will become much clearer. So those are sort of technological changes. But overall as an investor, I've invested in close to 60 tech startups over the last 5 years. I haven't invested in a single one 5 years ago. In the last 5 years, as I said, I've invested in 30 through a fund I co-started called Angel Cube, which ran from 2011 to 2015. But parallel with that, I've invested in close to another 30 tech startups, and there's really no pattern across them. I've learned not to look in the future and try and predict the trend that's coming. I've learned to look more in the past and see, are the founders really great, and what have they achieved to the day they come and see me? What's their traction, what do they look like? And that to me is more important. And the other thing that I've really realised is that in all aspects of my life of investing, whether it be shares or real estate or businesses, I've always concentrated my portfolios. I've never diversified. But with startups, it's the opposite. I feel that if you're going to invest in one startup, you should probably be prepared to invest in 20 or 30 because you need to diversify because the chance of failure is just so high.
So, question for you. How much does the individual play on the decision whether you say yes or no?
Yeah, that's a really great question. Early on in my investing time, like with Angel Cube, when I started the fund and I personally started investing, it was all about the idea. You get excited about the idea. And in fact, that was one of the reasons why we started Investors Org, because, you know, imagine if you were like me, you went out, built a business over 10 or 15 years, and then you sell the business, and you made a little bit of money, hopefully enough to retire on, and you suddenly figure, I've got to spare $200,000 or $300,000, I want to invest in startups, and my cousin or my nephew or my son even comes to me and says, I've got this great idea, and you get all excited about the idea. Every idea sounds wonderful, and you plonk the $200,000 or the $500,000 into it. Well, I can tell you, that money's gone. It's out the window. You're never going to see it again.
Yeah.
So much better off to not focus on the idea and focus on the people. And I've learned that over the last 5 years, that for me, investing in technology startups, ironically, it's all about the people first.
It's all about the people.
And then the next most important thing, once I'm happy that the founders have really got what I think it takes to succeed, like they're willing to learn, they're willing to make up their own mind on things, they're willing to really push hard, break through barriers. I mean, life is really tough. There's no easy things. I think the next thing I really look at, even more than the product, is how big can the market be? And that's one of the big failures we have in Australia in particular. We've got such a small market. We tend to think that I'm going to build, Facebook for Australia.
Yeah.
It's not going to work.
Yeah.
Facebook for Australia is just not a big enough marketplace.
Yeah.
In fact, there's very, very few markets, in my opinion, where Australia is big enough.
Exactly. So we spoke about the individual and the idea. Now, one common thing that I've been seeing recently is many individuals are coming up with these very exciting ideas, solid individuals, but they're not coming with a complete business. So the startup or the concept or the idea that's so brilliant, they still don't have a way for it to generate revenue, which at the end of the day is, bottom line, is what counts.
Absolutely.
Yeah, so what do you see, how are you currently seeing that in the space? Is it very common still, or have they sort of knuckled down and realised that their business needs to be making money in order to gain funding?
I think there's two groups of people. Well, first of all, on the startup side, they're always going to push for money early because they generally overbuild their products before they put them in the marketplace. So they front load their costs in terms of building a product too much. In fact, we discussed that about what you're working on.
Correct, yeah.
Which is, I believe, a marketplace for
sporting products.
For sporting products. And my advice to you was, get the product out there as early as possible with the fewest features possible, and then iterate on that. And most people have this grand idea and try and build the biggest thing to fit their vision and then take it to the market. They've spent all their money up front and find that the market wanted not that, but the market wanted that, and it's too late for them. So that's from the founder side. So they want the money early. On the investor side, I see two groups of tech investors, particularly early stage tech investors. One group will invest in ideas. They're usually not sophisticated tech investors. They're usually people, as I said, like I was 10 years ago when I sold my business. I've just sold my business and I'm interested in investing in technology. Or there'll be friends and relatives. They're all willing to invest in the idea and too early. The technology investors in Australia, the ones who've invested in technology over a period of time, they're called angel investors, are moving later and later and later. As they want to see a sign of life in the marketplace. It doesn't need to be a lot of sign of life, but needs to be a sign of life. And this is a trend that we're just copying what the US has learned. So Silicon Valley is always going to be 10, 20 years ahead of us. The early stage tech funds in Silicon Valley, like 500 startups, who've now invested over 2,000 early stage companies, they started off looking at companies that already had $1,000 a month in revenue. Now they're looking at companies with $10,000 to $100,000 a month in revenue. And that's, I think, what we're starting to look at in Australia. Starting to look at startups that have got some revenue and see sign of growth in that. And then they might be ready to get investment.
I mean, it's a sign of the space really maturing up, and things are progressing and moving forward. Yeah,
on the flip side though, right, the other end, what we're seeing is too many companies now IPOing too early.
Yeah.
So I get approached all the time to invest in pre-IPO deals for some tech companies, usually somebody from America or Israel, who can't raise money overseas. So they come to Australia and the ASX is in big danger in my opinion, of becoming not a true stock exchange, but becoming just a place to raise venture capital.
Wow.
And there's no liquidity in these companies, so I very, very rarely invest in pre-IPO or IPO stage tech companies because they're doing it just to raise money to grow because they can't get venture capital. So if the smart investors aren't putting their money in, why should I? Where's the liquidity? So there's that issue as well.
I mean, there was an article I read this morning actually about the current state of tech companies, or even companies in general, not acquiring IPOs in such a good time. I mean, apparently from what they said, the market is amazing right now.
Yeah.
Things are moving well. After Snapchat went public or acquired the IPO, that they thought that there'd be a whole pattern after them, and they're very surprised that it hasn't happened.
Yeah, well, I've got my very, very first startup was an American tech company called Sev1, and they're officially a unicorn now, which means a $1 billion valuation, but they engineered that. So I'm not saying they're not worth $1 billion, I hope they are, I've got equity in them, but they raised $50 million for growth at a $1 billion valuation. The point is that now, even in the US, they have to go for an IPO, and that hasn't happened for the last, since we got that last liquidity event, 3 to 5 years. So they're, these companies that are becoming unicorns, they've got to IPO because there's very few trade sales you can make at that size. So it's going to be interesting to see if that market cools off or not. I hope not in this particular case because I'm an investor, but the reality is that I've got no liquidity unless they IPO a trade sale. So the fact that they're worth $1 billion is absolutely meaningless to me.
Wow, there you go.
Mm.
But okay, so we spoke about trends and patterns and so on. Now, what advice could you give to those young entrepreneurs that are out there seeking funding, looking for that next investor to get involved in their business? What do you guys look for? How can we? I'm not going to say formula because there's no such thing, but what tips, advice could you give these people?
Well, you have to have a good story. So you have to build a good story around your startup, why you're doing it, who you are. I think you have to have done something before in your life. So if you're a first-time entrepreneur who's never had a newspaper round, never built a product, never had a lemonade stand, or there's no history of you being a founder before, of having done something, I would be personally suspicious. I would think you're just another corporate person who's got an idea and we'll give up and go back in the corporate world in 2 months' time if it doesn't
because it's
work
too
out.
hard.
Because it's always too hard. So you have to have staying power. Secondly, I would look that you're trying to address a real problem. I call it the difference between a painkiller and a vitamin tablet. So if you've got a headache, you're going to be desperate to take a painkiller and you're going to do anything to solve that pain. And the best startups find that pain point in their customer base and just aim to solve that one pain point, and people will eventually flock to that. Versus the other group, they've got a slightly better way of doing something, which is a vitamin tablet. Now, people like to buy vitamin tablets, stick them up on their shelves, but they'll buy them once and they won't use them over again, and they won't tell their friends.
No.
So that's the difference. So that, they've got to be somebody solving a real pain point, a painkiller. And the third thing is market size. That there's got to be enough growth to market. And the most important thing is that, as I said, that they've built some traction up along the way. So they've actually got customers who rave about the product and are using it regularly.
Awesome. Thank you for that. So finally, we've heard some great tips and points from you. Now it's time to sort of give back. Where can we find you on social media?
Yeah, well, so I've got a few channels. Most of my work is spent. Investors Org is aimed obviously to help future investors and current investors. So I keep that channel quite to one side. Most of the other stuff I do is for early stage tech startups. So like my Twitter channel, which is Small Time VC.
We'll link that up for you.
Yeah. I have a Facebook page now where I try startup early stage startups called I Will Try Your Lousy Startup, which is kind of funny, but it's a Facebook Live thing I do every couple of weeks to try a new startup. Again, to help founders understand the difference between things like a painkiller versus a vitamin tablet. I explained a couple of weeks ago the difference between using luggage as an example. Surprisingly, the difference between innovation and disruption. Two completely overused words that mean totally different things. So that's called I Will Try Your Lousy Startup on Facebook. And that's pretty much the best places to find me online.
Awesome. Thank you very much, Adrian. It's
Thank
been
you.
a pleasure. We'll catch you all next on the next show. Thank you very much.
Thanks a lot.
Take care.
Thanks, Ahmed.